Is this what giving up feels?
Hello everyone, I welcome you to my YouTube channel. First of all, how are you all guys? Because after a long time, around 6 months after the previous video, I am uploading this video. So today's content is very much different from the previous video. Today, we will discuss about Nifty 50. This is the base video. You can say that it is for children like who are the age of me or lower than me or higher than me. So they would be knowing about what is Nifty, and this would also help them in projects and to gain some knowledge about stock exchange and how to invest there. So yes, I think we should get started with today's video. This is the cover page, and I want to see that how much active you are while I am going through this video, because in this I have inserted a clue that is very much important in further of the video. So yes, let's move on. So economy health of India. Sensex and Nifty are two major indexes of India. So what is indexes? First of all, indexes is a compilation of shares in a portfolio. Like you see that in Sensex and Nifty, to trade, you need some specific app or some investor which will trade for you. And also you will invest some amount, and the portfolio that has been created by you by investing on the stocks are the indexes. Nifty is for National Stock Exchange, i.e. NSE, and Sensex is for Bombay Stock Exchange. This means that Nifty is spread whole over the country and Sensex is limited to the Bombay only. Nifty is the short form of National 50. Nifty is listed for 1600 plus companies, and company in indices for Nifty 50 is on top 50 companies. So indices, you could see that here are small cap, auto power, bank, mid cap. So these are some indices. So you see that there are 1600 plus companies. So they would be having more than 1600 indices, and the companies which are at the top 50 level. So there is the stock exchange for themselves, and this whole compilation is done by the Nifty. And Nifty represents all the compilation of the top 50 companies, their profit and loss, their industrial analysis, their corporate analysis, and their financial analysis. Okay. So Nifty started off on 1995 to 1996 with a base price of 1000 rupees. So on this picture, you see that there is a bullseye. So here this represents about Sensex, because Sensex is bullseye and it keeps increasing. But there was a time then it got down due to some reason that we will discuss in further video. So let's move further. Okay, so the price of Nifty 50 is on 29th December is 18,191, and this green symbol you see, it is plus 0.38, means this is a bull market, and 68.50 gained. And this is just the figure of the analysis. These are the industrial analysis, the corporate analysis, and the financial analysis. The three things that are used to define what is a company. So as you see that the graph is growing over and over, and when it closed on 29 December, it was 18,191. With this, we have BSE Sensex, which was 61,133, and it was 0.37% up. So what are the salient features of Nifty 50? Let's see. So calculated as per free float market capitalization method. Free float market, it means total market capitalization of a company. From that, we minus the promoter holding because they are not being traded. Why do we minus the promoter holding? Because they are of the government. That's why. On the basis of this, top 30 companies are being chosen. All major sectors are being represented by market leader companies. If we talk about petrochemicals, we have Reliance, ONGC, and if we talk about banks, we have HDFC, ICICI, and about tech, we have Infosys, TCS, etc. Overall, they are sentiment of people. Just remember this word sentiment of people about economy. Nifty and Sensex doesn't goes like according to the government. It goes according to the public. It talks about daily basis by people, not by government. As I said to you, if we have green sign, then it has bull market. And if it is of red sign, then it is a bear sign or bear market, you can say. So if the market is up for around 5 to 6 months on an average scale, then that 5 to 6 months, we have a bull market, and you can say vice versa. Next, how do government of people work? Or you can say, how do sentiment of people work? By socio-political environment, if there is stable government, then the market rises up. For example, when Modi government came, then there was a strike rise on the market. So why did I use how does government of people work? Because this whole slide that I am showing is related to that only. How does the government of people work, or how does the sentiment of people work? Okay, so if there is a government of pro-business, then also market goes up. Pro-business, like the business that has got profit and losses and is stable now. And it is working nicely and gaining profits. And because there is supportive nature to the market also. And through pro-business, if there is profit, then market is also profitable. Second, can be about business policies in a country. Mainly business policies in a country matter a lot. India had an image of very bad business policy control, but now it has improved in the rankings. Now business come to India, and also you can say that it is being circulated outside the India. So here if we see that very bad business was there before the Sensex was released, and there was no stock exchange going on here and here. And through seeing the other countries, India also tried to develop themselves. Nowadays, whole world is being interlinked, where one country sells product and other uses it, meaningly international affairs. The third main feature we got is international affairs. If one economy goes down, then there are highly chances of other to go down. So let's take example that we have a stock of USA named Dow Jones. Okay. So if Dow Jones goes up, then our Nifty and Sensex will also go up. And if it goes down, then it will also go down. So you see the interlinking between the countries. Okay. So then it is now also it is dependent on future of the industry, because technology has made drastic change in these 25 to 30 years beforely, and no one knows what will be it in future. Mostly renewable energy will be very efficient, because as you see the resources are getting down and the prices of them are increasing. So for this we need most of the renewable energy, and the companies which are producing these and will flourish in, I think, 2 to 3 years will be there to provide it, and they will like take the market in the future. Next is markets move in axis. So what does this means? Let's see. If positive sentiment, like if the market is up to 30%, you see, but earnings are only 10%. Now you would be thinking that market has gone up 30%, but the earnings are only 10%. So we have attained a loss. But no, just see, if the negative sentiment is there, where the market is down, but then earnings are only 10%, You see why the earnings are same here. Just write in the comment box. From which we get to know that there is no stability in the axes of the market, but it leads to loss of one country. I haven't wrote the reason here. I want you to understand and write it in the comment box. So let's take an example on further page. So if you see in this whole picture, the credit crunch. So there are two persons which are holding the banks, the Wall Streets, Jiffy Mortgage, and then in the Wall Street, a person is saying that president, it's all holding up just fine. Why? Because the credit crunch, as from the name it suggests, about the market of the USA. And the market of the USA is dependent upon, you see, Jiffy Mortgage here and banks here, Wall Street here. So it is directly dependent on themselves. And if if these two persons will fall, then they will also fall. Subprime crisis. Okay. So this is a new word, subprime crisis, because it was happened from 2008 to 2009 in India and USA majorly. Now the interlinking comes because USA had subprime crisis, and due to that India also had subprime crisis. In 2008 January, we had Sensex at 21,000. And in September 2008, we had Sensex at 9,000. You see, such a loss is there. Now you would be thinking that there is a loss on earnings, but no. As we see in the previous thing, the positive sentiment and the negative sentiment. If it is going up and it is going down, the earnings are same because your securities is changing, not your dividend upon the share is changing. And because subprime crisis happened in USA majorly, it affected India also because of correlation in stock exchange. I taught you about interlinking, and this feature is being used here. So it felt like outsourcing jobs and businesses will end. These were the mind dreams of the people at that time, that there would be outsourcing jobs and businesses will end, but there was nothing like this. So there is a very big impact on sentiments of market. Markets always tend to overreact, and that's why the markets always move in excess. This is the answer of that question. Markets always tend to overreact. Why they overreact? Because they are not stable. If you see securities are going up, you see the dividend is also going down. And that's why if the market is up, then the earnings is low. And if the market is down, so the securities are more and you will have earnings. So you see there is indirect relation between them with market, indirect relation with securities. Whenever the market goes very low, like in September, there was a bear market, a very cruel bear market. So there is an opportunity for you. What is the opportunity? Whoever has purchased the stocks in September 28, they may have earned very good returns, because if they would have like purchased it at very low price. See that there is a stock named ABC, whose price is 15, okay, at that time, and initial was 45. So you see the difference of 30, and this is why they will attain good returns, because they are purchasing the share at very low cost. So now the disadvantage is there. Similarly, whoever has invested in January 28, they may have loss because they have purchased the shares, and they possibly might have sold the stocks before September 28, because you see that while going uh, through January to September, we have that they could have attained a mindset that yes, it is going down, so we need to attain our money back. So definitely if someone buys at 21,000 and sells at 9,000, there is a very big loss. Or you can say if a company has this, then it could get bankrupt also. If you look at the returns of a company, for example, company A has earnings of 50%. Okay. And it was in 2008, but it does not depend on that because time period is not that much required to compound it. Its fundamentals are very strong because you see earnings are 50% up. Yes, I also agree that. But then sentiments are gone too worse because I said that markets are inversely proportional to the securities. So sentiments are gone down and from that earnings are 50% up. So you see the stock may fall. And that's the main reason why the market is not stable. This is not a big deal according to me, because stock exchange is dependent on group psychology and sentiments of people. Group psychology means that if you want to have like doing trading in the groups, then it would be very nice because of different mindsets and you would be gaining some more knowledge. And this group psychology is being shown by Z Business. I think you would be knowing this channel. Okay. And sentiments of public as told further. So now I'm pretty sure that you would have understood today's video. And if you are with me till here, so thank you for watching this presentation and video. And if you like this video by heart, please like, comment, share, and subscribe to this channel for more informative videos. And we will meet soon in the next video. Till then, bye.